Good morning and welcome to today's Knowledge Bank. Today's webinar is being hosted by Ray Armand from Qube Accountants, and she's going to be discussing service charge account preparation. If you have any questions throughout the webinar, please submit them via the Q&A box at the bottom of your screen, and we will try to get through as many as possible at the end. The webinar is also being recorded today and will be available to watch back via our YouTube channel later on this afternoon. Without further ado, I will now pass you over to Ray to begin the webinar.
Thank you, Vicky. Hi, everyone. Thank you for taking the time in your busy schedules to join us in this webinar. So basically, it's time to unleash efficiency and eliminate any year-end frustration that you experience. The idea of this webinar is to provide tips and tricks on how to make service charge account preparation a pushover rather than a pain. Okay, that's what we said when we put the marketing out there. So if you're on this webinar, I know that you are the kind of person who wants to be a world-class property manager. Otherwise, you wouldn't be spending your time doing training on something like this. But one of the problems you face, or should I say one of the many, especially with everything going on with the fire regulations, etc. But one of the problems you face is that there might be an inefficiency in your service charge preparation process. It takes longer than you want. There's more back and forth than you want. So my idea is to help remove the frustration you experience as part of the service charge account preparation process to hopefully make it more slicker and streamlined so that you can focus on what you do best. So this session will focus on how to streamline your internal processes to reduce the time and effort that it takes to provide information that is needed for the preparation of the service charge accounts for the blocks and estates that you manage. I will explain some simple tips to improve your processes, as well as provide a done-for-you checklist, which you can go away and implement straight away with your team for maximum impact. So really, what I'm trying to focus on doing is give you maximum impact for the time that you invest in watching this webinar. Let's see, is that clicking? There we go. So I want to start by just to give a bit of context, a bit about me. So by way of background, I am a chartered accountant with ICAEW, which is the Institute of Chartered Accountants in England and Wales. And I have a master's degree in finance. I started out at the world's largest accountancy firm, PricewaterhouseCoopers in Cape Town in South Africa. So you might hear that from my accent, before moving to Deloitte, London. And now I am a partner at Qube Accountants, which is based in Exeter, Devon, and we specialize specifically in service charge accounts. So this is what our team does day in and day out. I just wanted to say at this point, I do have the Q&A box open and the chat. So if you do have questions, I will kind of gauge as the questions come in, whether it's going to be more appropriate to answer those questions as we go along or to address them at the end. So if you do pop up with questions as we work through this information, do let me know and I will see if I can answer it at the time. So what will we be covering in this webinar? I've grouped it into 3 broad categories. The first is bookkeeping. I will be giving you top tips and tricks and really talking about why it is the foundation on which all else is built and how you can't get useful information unless the bookkeeping is done properly. We will then walk through the optimal year-end closing procedures, and this is where the checklist comes in handy and where I'll be sharing the done-for-you checklist. And finally, we will cover off our other time-saving tips. My goal is to help you to achieve the following. So this is what I want to focus on and what I'm hoping you'll get out this webinar. Firstly, as I've mentioned, to reduce your team's frustrations at year end. Secondly, to avoid time-consuming year-end processes, to really bring the time that you spend on year-end processes down. Third, it's to reduce the number of queries that come back and forth from your accountant. So obviously that links to frustration and time, but just to kind of make sure that there's not this constant back and forth filling up your inbox. And finally, to reduce the turnaround time that it takes from the company financial year end of the resident management company to presenting the service charge accounts to your clients. So really to wow them with good financial information that's presented in a timely manner. So that's what, if you follow the steps that I'm going to outline in this webinar, you should be able to achieve all of that. Okay, so let's start with looking at bookkeeping. I wanted to begin by taking a moment to highlight that bookkeeping really is the foundation on which all else is built. What do I mean by this? Well, I'm sure you've heard the saying, garbage in, garbage out. Basically, if the bookkeeping is not done properly, then a lot of complex wizardry needs to be performed on the numbers before any useful reports can be generated. Okay, so while the bookkeeping process, if done correctly, is relatively straightforward, small mistakes can add up over time and can make the process of preparing accounts far more complicated than it needs to be. On the flip side, good bookkeeping enables property managers to effectively manage funds, allocate costs fairly, maintain clear and accurate financial records. Effective bookkeeping is absolutely essential for creating and managing budgets related to service charges. So this is saying I'm going to really highlight and drill home. Like if you are preparing your budgets, or if your clients are sort of questioning the budgets, the bookkeeping, the recording of what transactions have happened during the year is essential to both creating and managing the budgets throughout the year. So it's a really important part of that. Accurate bookkeeping will guarantee realistic budgets. So if you've done accurate bookkeeping, it's going to ensure that when you set your budget the next year, your budget's going to be more realistic if the bookkeeping has been recorded accurately. And it also will ensure that you as the property manager can make informed decisions on how to allocate your funds. Furthermore, in the event of disputes, which happen from time to time, or inquiries regarding service charges, well-maintained books serve as a valuable reference because their detailed records can be used to clarify the basis for charges, demonstrating transparency and fairness at any tribunals, putting you in a strong position should there be any disputes. So bookkeeping will not only help you with the day-to-day, but it puts you in a strong position a couple of years down the line if there is a dispute. So let's take a look at my top tips for bookkeeping when it comes to resident management companies. So we're going to be running through each of these one by one. Before I delve into these tips, I want to highlight that the language I'll be using to run through these tips, i.e. the way that I'm going to describe each of these points, will focus on larger managing agent businesses, where the accounts team is separate from the managing agent, i.e. the key person who's responsible for managing the block day to day. So you have your accounts department and you have your separate managing agents. That does not mean that these tips are not relevant to smaller agencies where there isn't a separate accounts department. These tips are essential to success regardless of the size of your estate agency. So if you have a smaller agency where there is not a separate accounts team, please still take the core principles that I highlight and apply them to your scenario because it's all relevant. So the first tip I want to talk about is to automate activity. So this is something that I'm quite passionate about. I've spoken about it for years and in trading entities and different scenarios in the accounting framework. And I just want to talk about it around specifically how it impacts service charge accounts and resident management companies, i.e. block management. Okay. So one of the best steps you can take to minimize the amount of manual work that is done when bookkeeping will be to automate your activities. You'll be surprised how common it is for people to still use massive amounts of manual processes, even when they are using a piece of software that could be doing all the heavy lifting. I see it time and time again. There's so much that people do that they don't even realize that the software could do for them. So really a big part of what I'm going to be pushing on this point is to say, look at what your software can do and embrace the technology. So with all the technological advancements, it is pointless to spend hours and hours manually recording transactions. Ensure that you have a good piece of software that is powered by AI. Now, I understand that often your block management software does so many other things other than the bookkeeping. So you're not about to go and change your block management software just because the bookkeeping isn't good. But if you are in the process of choosing software, or if you are able to, like, you can separate out the bookkeeping function, or just keep in mind that a good piece of software makes all the difference. So if software has AI and gradually learns from your activities, which we see in most of our sort of mainstream accounting pieces of software like Xero or QuickBooks, and hopefully in your block management software, this type of AI learning is coming in more and more. But what happens with the AI is it gradually learns from your activities and then makes automatic suggestions on how to, for example, classify transactions, etc. Look out for software that also allows you to create automation rules, such as categorization of expenses or sending invoices after a specific period. So automatic repeating invoices for your service charges, or sending reminders where service charges haven't been paid, like that can be done automatically, or making even recurring supplier payments. Look out for all these sort of automation options within your software, because it is going to be massive on the time saving side. Honestly, the time will stack up to the point that I think that in 5 to 10 years time, if you're not embracing this technology, it's gonna be hard to compete with the other sort of competitors in your industry, because they're using the automation. They're able to be far more efficient and actually spend time on other sort of more client value add areas. So to keep up, you need to automate wherever possible. So the key takeaway here, like I said, is to make sure that all the features and functionality available within your software is being put to best use. So take time, even if you're busy, like once every 6 months or so, to look at what features are available in your software and could you be using them in your processes. The other thing that I really want to highlight about automation is that it not only saves time, but it also ensures consistency. So like as an accuracy. So for example, if you use what I call a supplier rule, it may have slightly different terminology in your technology, to decide where things should be allocated. So, I mean, a common one that always comes up, it may not be relevant to blocks, but like, let's say when you paying for the subscription of Zoom, or the subscription of I'm thinking about like software, like your Gmail account, or so, like software. Sometimes people will code that to IT software consumables. Other times, if there's a code, they'll code it to subscriptions. Like there's and 1 month, depending on your mood, you might be like, oh, that really feels like I should be putting that to software. And then 2 months time, you forget you've been putting it to software, and you actually put it to subscriptions, because that's human nature. If you use supplier rules, which any good piece of bookkeeping software should have in it, it ensures that every time a transaction comes through from that supplier, it goes to the same account code. Okay. So rather than expenses being allocated ad hoc, they always appear in the same code. And that will ensure that when you run reports and prepare the service charge accounts or do a comparison to budget, it actually makes sense, the figures you are looking at for the financial year. Now, I want to finish off by saying on the automation point here, without a doubt, the human involvement in bookkeeping is absolutely essential. Machines could not do it without humans. Okay, humans need to sense check things because the machine doesn't always get it right. But please try to use automation to reserve the human effort for when it's actually needed. So, like 80% of the effort is like data entry. Let the machines do that, and just save your effort for the things that the machine can't do. Okay, the next point I want to make, I'm sure this has been drummed home so many times, is about going paperless. It's not just about the environment. I'm going to talk about all the aspects. And it's funny because as much as this going paperless has been around for 10, 15, 20, maybe not 20 years, maybe 10 or 15 years, it's crazy how much paper there is still out there. And I mean, HMRC is one of the biggest culprits. But while many businesses attempt to go paperless, most of them fail to achieve the desired objective. It's very common to still see loads of paper being used in business. This is because the use of paper is not often entirely in your control. For example, your suppliers may still be using paper, so you're getting paper coming through in the post. Nevertheless, there is a lot you can do to become paperless, despite your other people in your supply chain still using paper. To start with, you should stop using paper within your operation, your internal operations. And this is not just in relation to your bookkeeping. Try shifting all forms of approval and documents to soft versions on your computer. Whenever you send any documents, for example, even just a supplier invoice, if you are a bigger team and you have your managing agents and your accounts department, when you send a supplier invoice to your accounts team, use electronic as opposed to paper version. So it's creating a culture of not using paper. So even if that's come in a paper format, make your process that the paperwork will always get submitted to your accounts department in a digital format. Keep in mind also that there's typically no tax requirement to keep original paper copies. So there's no need to be keeping those paper copies. As long as you have a scanned copy on file, that satisfies the requirements to keep records for like 6 or 7 years. Okay. Now, other than the obvious environmental benefits, the main reason I'm pushing going paperless is because of the massive time savings that you'll benefit from this. So honestly, it adds up over time. For example, when needing to find paperwork for the accountant, when the service charge accounts are being prepared and they ask for evidence of transactions taking place, or when you need to look back in a couple of years' times as evidence for a dispute or an HMRC investigation or anything like that, it will save you so much time if if that paperwork is in a digital format. I also highly, highly recommend, if your software allows, attaching a piece of evidence to every single transaction in your bookkeeping system, rather than having the evidence sitting somewhere in like a G Drive or a Dropbox. Yes, it's neat to have a G Drive or a Dropbox with each year and a month for each year and having the items all in there, but that is nothing on the power of having every single transaction attached. So when you pay for the guarding and the maintenance, making sure a piece of paperwork is digitally attached to that transaction. So when you go look up, you can just click on, open the evidence up, and see exactly that you have that support to evidence that transaction. So paperless, embrace it, do your best, and it's about making small changes as you go along. Next, I want to talk about maximizing integration. So this is getting a bit more techie. It's looking at the software that you might use currently to manage your block and looking what else you can add on to talk to that. So the key here is that your bookkeeping software or your block management software is not an isolated platform. You may see it isolated, but it's important to now look outside just that isolated piece of software. Your software almost certainly can communicate with other software programs to send and receive information. So use this to your advantage. From day one, your objective should be to use software programs that communicate with each other instead of being operated in silos. If you maintain standalone packages, you will not only require more time and data transmission, so moving data between packages, but there's also a risk of mistakes or errors arising in the process. So the moment you're manually moving data between software, there's an increased chance of things going wrong. And this is simple as your bank feed from your bank. You shouldn't be manually downloading the statement and importing it to your software. You should have a live bank feed between the two. Remove any human involvement when it comes to two pieces of software, even your online banking and your block management talking to each other. So like I say, starting at a basic level, ensure that your software is automatically pulling in bank feeds rather than you having to manually import them. You can also use integrations to manage things like supplier payments. So look if your block management system can connect up to a system like the popular ones out there are Telaroo, Cresco, you get Modular. And if there isn't a direct link between your block management software and something like a Telaroo or Cresco, like these payment providers, then I'm sure you've heard of Zapier, which allows you to get to, like it acts as the middleman to get two pieces of software to talk to each other. So that can be massive on the time saving side if you use a piece of software that's going to help you with paying suppliers. Also, you can use software to introduce powerful credit control processes far beyond what your block management can do. So your top competitors in that space are pieces of software like Satego or Chaser. So make a note of these names. Satego or Chaser are amazing for chasing people who haven't paid you. This is like your service charge accounts. And you can even use software to link up to help with your cash flow forecasting or your budgeting. Anything that you want to do within your block management processes, there's probably a piece of software that connect to your current software to help you automate that. The idea here is to build out your app stack or your app ecosystem. This is terminology we use, an app stack or an app ecosystem, to create a network of software that automatically talk to each other. Keeping data live, up to date, and accurate. The time saving you will experience will honestly blow your mind over time. And like I say, if you don't embrace this, it's going to be hard to compete in like 5-10 years time, I think, as people embrace more and more technology. The next point that I want to talk about, and I'm going to be banging on about this quite a bit, is using checklists. And this is where in a few slides time, I'm going to be going through a done for you checklist for you guys to use. Bookkeeping involves a series of connected steps. Okay, so it's a whole lot of steps that you do. You need to do them in a certain chronological order. And missing out on even a single step can prevent you from achieving the desired output. No matter how experienced you are, it is always advisable to use checklists. It is the only way you can ensure consistency. So if you're not using checklists in your not accounting practice, but in your agency, you really, really need to start to implement these as part of your processes. It is the only way, like I said, to ensure consistency. I have seen some insanely experienced bookkeepers miss out on vital steps without checklists. So it really is key. So what checklist do you need? Like, where do you start? Well, the best way is if you look at the key bookkeeping tasks that should be completed at the different intervals throughout the year. So your main intervals for capturing transactions for bookkeeping is firstly depending on how regularly you do it, but either daily or weekly, you would have a set of checklists. Monthly, you're going to have a set of checklists, and then annually, you're going to have a checklist that you go through, okay? Weekly, you should have like a mini checklist, like just a quick one that your bookkeepers can quickly run through, like I said, on a daily or weekly basis. And it should include things like confirming that all supplier invoices in the inbox have been processed, confirming that the bank is as reconciled as it can be, that checking that no invoices are awaiting approval if there is like an approval process. So just checking for any missed approvals, cleaning up accounts payable, accounts receivable, like following up on any credits that are sitting there, following up on like has this supplier bill looks like it's 6 months old. I know we paid that. Why hasn't that been matched up to a payment? Like having a checklist reminding you to do all these checks. That should be done on a weekly basis minimum. Then monthly is the sort of next checklist that you should create. So on a monthly basis, you have a separate checklist for the bookkeeping. And this is where your checklist looks at running exception reports for errors or discrepancies, sending reminder letters to customers, like, chasing up any customers or, your leaseholders who haven't paid, and preparing various monthly reports. Okay. I haven't got checklists for the weekly and the monthly. I can send those to you at another time if you want. We will be doing a super deep dive into your year-end checklist, because the point of this webinar is to really help you to nail down the service charge accounts process. So the yearly checklist is going to have the greatest impact on that. So we are going to delve super deep into checklists when we look at year-end closing procedures later in this webinar. So I have a separate slide focusing on year-end checklists, as these are, like I said, where the magic really happens in terms of saving massive amounts of time on the administrative side of preparing service charge accounts. Okay. So that's what I wanted to say about checklists for now. The next point is comparison to budget. So this is actually something that can be included as part of your checklists to be done periodically. I recommend at least quarterly, but I wanted it as a separate point because it's really important. Actual expenses compared to budget is a very emotive area for the property owners, the leaseholders. I have been in AGMs and I have seen how upset the leaseholders or the property owners or the directors of the resident management company get about this. So when there's a budget that they've been given about how their service charges are going to be spent, and then they get a report and that doesn't quite line up, it's a very emotive area. So because it has a lot of emotion to it, I suggest as part of your bookkeeping checklist, it is something that is checked on a regular basis to see how or why you are deviating from budget. So we highly recommend doing what I call a regular reasonableness check of your expenses to budget, rather than just once a year. Once a year is probably too late down the line. This will allow you to preempt overruns and possibly communicate those to the leaseholders sooner rather than later, and detect errors in how things have been allocated while bookkeeping. So this could be down to you have actually spent in line with the budget, but the bookkeeping hasn't been allocating it the same way that the budget has. So you can then pick that up sooner and make sure the bookkeeping is allocating appropriately. So it's a powerful control procedure that is essential to include as part of your checklists. The next point I want to make is about opening separate bank accounts. Now, this may not be a popular option, but I want to take the time to highlight the massive benefits that can come from opening a separate bank account for each of your sites, like each of your blocks or estates. Okay, so let's run through some of the benefits that we have seen from a practical point of view when you have separate bank accounts for each of your sites. Firstly, it's massively quicker and easier to do bank reconciliations, i.e., what I mean by this, bank reconciliation sounds like a technical term, but as payments are made or money comes in, if you have distinct bank accounts for each site, it's very easy to see what site that relates to and not get things confused across different sites. accounts. Secondly, it is best practice as recommended by Rix and Armour, specifically in Tech 311, which was done with Rix and Armour and RCAW, like the different regulatory bodies. It is best practice to have separate bank accounts. Thirdly, it will, without a doubt, as I've kind of touched on already, reduce the number of errors. There's no doubt that it will reduce the number of errors that happen because you're not having everything muddled to one bank account. It will also bring your customers more comfort knowing that their money is held separately, which of course could be a good selling point that you could highlight to customers over and above other managing agents. And finally, it helps with cash flow forecasting or management. Otherwise, having all your money pooled in one bank account can make it more difficult to work out whether the managing agent as a whole will be able to meet the cash flow needs of all your sites. Finally, I want to say on this slide, as our bookkeeping tips, is to seek professional help or training. So the advice I give here on this point very much depends on the size of your managing agent, because you might have a separate accounts department to your actual managing agents, or the managing agents, or the same people within the team might be doing the bookkeeping. If you do not have an accounting background and you are doing the bookkeeping, I highly recommend getting some formal training. Bookkeeping may seem just like data entry. And yes, like I said earlier, while 80% of it is data entry, it is the other 20% that if it is not done correctly, it's those small little bits that can cause bigger and bigger problems over time. Even if you feel that you do not need an experienced bookkeeper on your team, so you're not going to do the training, so you're not going to train up one specific person, try and engage an expert to review your processes to streamline them as much as practically possible. If your data is scattered all across different spreadsheets, so like some warning signs to look out for. If your data is scattered across different spreadsheets, if you're spending hours and hours making manual entries, and if you're always finding discrepancies in different areas or discrepancies between your records and the final bank balance, it's time to seek professional advice. Use those as indicators that you need to get someone in to help you look at this. People are often surprised to see how easy bookkeeping is once the processes are streamlined. If you do not have an accounting or a bookkeeping team, if you do have an accounting or bookkeeping team, ensure that they are sufficiently trained and ensure that you provide continued professional development to keep their skills fresh and up to date. Oh, I forgot on this, I am moving on to some other slides. This last point, I did say what the other one was the last point, but this last point now moves on to some other slides. So the final bookkeeping specific tip that I'm going to show you on some other slides is to draw up a system walkthrough. What do I mean by this? This is essentially a step-by-step visual of the approvals needed for each function within the accounts team. This process will hopefully also highlight to you the importance of having separate roles for each for internal controls within the accounts team. Okay. So let's take, this sounds all very technical, but let's take the payment of supplier invoices as an example of what I mean by a system walkthrough. So I've got some visuals here on the screen. Okay. Now the examples I'm going to run through are quite visual, but there is no need to make them visual if you don't want to overcomplicate things. You don't need to. You can simply just build out some bullet points in a Word document. The key here is to take the time to think about and map out your processes rather than having them in your head. Just get them down on paper so you can see and identify the issues. So the first example I've got on here is highlights how you can set different levels of approval depending on the amounts that need to be paid to a supplier. So here you have an invoice coming in from a supplier, and you're going to have, you don't necessarily have a manager reviewing, you might have someone in the accounts department, or you might have the block manager, the managing agent, looks at the invoice and then sends it off to the accounts department to pay. When it arrives at the accounts department, depending on whether the amount is over 1,000 or under 1,000, will change whether you get one or two people then approving that payment. So then the next, that's just one example. The next slide I want to show you is another way you could map it out. So this is a good visual to show you how many different steps there can be between from when an invoice received and when an invoice is actually paid. It's not like invoice received, invoice paid. Okay. You can see here that you're going to first record and match up the invoice to maybe any purchase order you have. You're then going to make sure that that invoice that you need to pay that supplier is approved, and then it can get submitted for payment before it's paid. And you can have a different person responsible for each of these. It's always recommended to have as many different people responsible for each step as possible, because that is going to make more and more like sort of stronger internal controls around error, around fraud, around everything. It reduces the risk of those. Obviously, obviously, if you're a smaller team, you're going to have maybe one person doing all of these. But the important thing is just to map out your process and see where there might be weaknesses in that process. And the final one I wanted to show you on the screen here is you can even zoom out more and look at the supplier payment process, starting right from where you're looking at whether the work even needs to be done. How do you then decide who is the right supplier? How do you get quotes? Who's responsible for that? So you can kind of zoom out even more. So hopefully these provide you with some good visuals of the ways you can map things out. The point is to get really clear on your processes. Not only will this help you streamline things internally, saving time day to day, but it will also save time when the service charge accounts are being prepared. Because if you provide your system walkthroughs to the external accountant that you're using, it will help them to understand, let me just stop this, how you process transactions and reduce the number of questions that they come back with. So anything you can do to reduce the number of inquiries and to shorten the time it takes to produce service charge accounts, and even just like I say, save time day to day, is going to be massively beneficial. So on to the next area I wanted to cover, and kind of like the main focus for today, and the thing that I think is going to have a real impact for you, is the done for you checklist. So year-end closing procedures. This is of your bookkeeping activities. I mentioned you want to have a checklist for weekly, a checklist that is done monthly, and then your year-end closing checklist or procedures. Year-end closing is an essential part of bookkeeping. It focuses the mind of the bookkeeper on taking proper steps to ensure the financial transactions are recorded and up to date. Having a year-end checklist for bookkeeping is absolutely crucial for several reasons. So let me highlight that to you before we jump into the checklist. A year-end checklist for bookkeeping is like a financial spring clean. It's like spring cleaning all the clutter and mess that is built up throughout the year that's going to make the financial information like have these weird anomalies when you present it to the directors at the AGM. So it ensures that your financial records are in order and ready for the next phase of accounting, i.e. the preparation of the service charge account. It's like tidying up your financial house to make sure everything is neat and organized. So I've prepared a done for you checklist to help you with this process. Keep in mind that the checklist I have prepared has been prepared for a managing agent where there is a separate accounts department from the actual people who are doing the day-to-day managing of the block or state. If you are a smaller managing agent and don't have departments, then you will be in the wording. If you look at the wording I've used in the checklist, you will be both the managing agent and the bookkeeper or the accounts department. So the wording in the checklist still applies to you. The wording will need to be adjusted a bit before you can then apply it in your own practice. So without further ado, let me just pop on the screen the checklist that I'm going to share with you. So this is the checklist that I'm going to send to you after this webinar. And this is saying literally, I mean, I've done it in Excel. Amazing if you could even implement it in your own. So I just want to pull up, I've lost the notes that I had. You can even use it in your own like software. So that's what I wanted to say. You can obviously have a spreadsheet that your bookkeeper opens up and goes through and marks each of these areas off. But you can also, if your software has the ability, I know a lot of my software does, to build in checklists, it can be super useful for that. I'm just trying to see here. I've lost my, there, that's because it's gone. My notes on what I wanted to talk about on each of these points. So I'm just going to move that around. Okay. So what did I want to say on each of these? So what we've done is we've grouped them. I'm going to show on the screen. We've grouped them into the various areas that you would need to focus on. So you've got your debtors, which is like the clients, the individual leaseholders, the people who owe service charges as your debtors. So don't get overwhelmed by the terminology. If you have any questions on the terminology in this checklist, pop it in the Q&A and I'll answer it. But debtors is like the service charges that are due from the leaseholders. You've got your suppliers. You've got banks, or specific work that you need to do around the bank. You've got work that you need to do around the balance sheet, so your assets or liabilities that that specific block holds. Work that you need to specifically focus on around the income statement, and then your final queries and a list of reports that you need to prepare. So it's really important, if you can, to not, I know often managing agents work with lots of different accountants. what's going to save you loads of time is to not let every different accountant that you work with drive the reports and be like, wait till them to send the queries, to send the information, because that's going to make your service charge team really inefficient. Your internal service charge team. You want to have a standard pack of information that you prepare that you know is going to address all the queries that accountants ask, and be like, boom, here's a pack. You're probably not going to have any questions because I provided you with everything you could possibly need. So basically, leave us alone until you've got the service charge accounts. That's the ideal situation here, okay? So obviously, you're going to have a list that you provide to accountants. And if you find they're asking questions of specific things, then try to preempt that and add it to the list of reports you then provide in future. The idea is to prevent any back and forth. So let's run through, that's just kind of overview. Let's run through like key areas. And obviously I'm not going to read these all in detail, but I'm just going to talk about what we're trying to achieve with each area. So under debtors, the idea here is to clean up and get payment allocations correct. So you want to make sure that you've allocated the correct payments to suppliers, and you don't assume that there may be a supplier that looks like you haven't paid them, but actually there's been a misallocation of a payment somewhere. So just doing all these final checks on old amounts that look like they need to be paid. Oh, sorry, I'm talking about suppliers, but the same applies for on your client side, on your service charge income. You just want to check that you haven't misallocated a payment to another leaseholder and you're actually chasing someone up when you know they normally pay on time. Why does it look like they haven't paid their service charge from 12 months ago? Like, pick up those things. Also, at this point, you want to identify any bad debt. So you don't just want to be like, oh, those are 12 months old, I'll ignore them. Your year-end bookkeeping is the time at which you say, right, let's look at all those old sort of amounts that need to be paid. And should we be making the decision to maybe write those off, or chasing them up, or taking the kind of the credit control to the next phase? It's doing little things like saying, well, are there amounts less than £1? Those should just be written off because that's a small difference. You shouldn't worry about paying those. It's neatening things up because it just makes it so much easier going forward when things are neat and tidy. The next, on the supplier side, the idea here is to ensure completeness, very similar to above, to ensure that you haven't missed out on any supply payments. So looking, if you know that the gardener comes every month, are there 12 invoices from that gardener? If you expect an invoice for an insurance every year, can you see the insurance invoice? So have things in your checklist looking out for these. You also want to identify accruals. So an accrual is basically like, because you might do your bookkeeping on a cash basis, like cash in, cash out, cash in, cash out. But the service charge accounts have to be prepared on the accrual basis. That means we ignore when cash is paid or received, and we say, when did this income or expense actually take place? So a good example of this is always insurance. You pay for it once a year. Let's say your financial year runs from January to December, and you get an insurance invoice, like you pay for insurance every year at the end of August, okay? So actually, with the insurance you paid for at the end of August, that's going to run till, the August next year. Only 4 months of that apply to this financial year, and the remaining 8 months apply to the next financial year. So we have to actually, let's take some of that expense out and put it into the next financial year. So it's identifying any payments you made to your suppliers at this point that span over the financial year. What else do we need to do here? It's just identifying, like I said, key info for reporting. So the other areas I included at the bottom here is looking at whether there are any transactions with the directors, because it's a key requirement in the service charge accounts to report whether there are any transactions with the directors. Also, it's also a requirement to report to any director's costs. So making sure, as part of your bookkeeping year-end processes, that you are taking the time to identify that relevant information. On the bank, it's doing things like making sure that the bank statements agree to your bookkeeping records. You'll be surprised how often you get a bank statement, like when you're preparing service charge accounts as the external accountant. You get a bank statement and you ask for proof of the bank balance and they don't agree. Otherwise you're not comparing, like there could be a whole lot of transactions missing. It's very important that your bank statement is checked that it agrees to your accounting records. On the balance sheet, what you're trying to do here is identify any unusual balances. Like, why is there, I don't know, like a £100 interest? Oh no, not like because that wouldn't be on the balance sheet. I'm trying to think of an example of something. I could think of stationery or stock, or they're saying random that just doesn't make sense what's on the balance sheet. Look for unusual balances, and then also working through all your balances. So I've mentioned your bank balance, but if there's savings accounts or just a reserve fund, does every asset or liability on that balance sheet have evidence to support the balance. So it's looking for evidence to support every balance. And then taking the time to check that the reserve funds have been managed appropriately and in line with the lease. So doing those final checks. On the income statement, your main focus on your checklist is to check that everything is being done in terms of the budget. So doing a thorough comparison to budget and doing that sooner rather than later. And finally, clearing all the queries. I've already mentioned you want to be making sure you're preparing a pack of information for your accountants and not letting your accountant's queries drive what information you send. Have a standard process with a standard pack of information that goes to your accountant. It's going to save so much time. Okay. And the other big thing that I don't know if people always wear is just make sure I've got prop man there, because when we first prepared this report, the managing agent we're working or are working with uses prop man, but obviously you would slot in the name of your software there. But basically you need to, there should be something, the terminology might be a bit different to this, but you need to lock the account. So once you've reached your financial year end, so we're sitting in November now, so let's say your year end was 31st of October. Make sure once you've kind of made sure all the supplier invoices are in, your bank balance agrees, once you've done all these things, one of the final things on the checklist is to lock it, which means that no further transactions can be entered into that period. Because otherwise what happens is you run the reports, you provide them to accountants to prepare the service charge accounts, you forget to lock your software, service charge accounts get prepared, and a whole lot of figures get changed in the underlying bookkeeping. So that this year or even next year, when you come to look at, say, and actually report on those service charge accounts, the figures that are reported to your leaseholders, your clients, will be totally different to what's in the bookkeeping. So it's very important that once the information has been sent for the service charge accounts to be prepared, that those records are then locked and no further entries can be made. Okay, so I'll get this checklist across to you. It should be a really sort of thorough starting point for you to then implement it within your own estate agency. So that's checklists. What I want to end off by doing, so it should be like another, like maybe 5 to 10 minutes, is to talk about some final tips and tricks to reduce your stress, to gain more time, and to impress your clients, because that's the point of what we're trying to help you do here. Okay. So the first one, I just want to move this, is to take the time to read and I haven't clicked the thing, to take the time to read and summarize the lease. So often I must say, all the different managing agents we've dealt with, and when we ask for a copy of the lease, and we ask, do you have a summary of the lease that you can give us? No one's actually done it. Now, I appreciate that a lease or transfer document, but there may be, you could argue that, oh, what's the point? Because on some sites, like if you have 10 or 50 blocks of flats, or 50 flats, sorry, in a unit, that they might be slightly different. But in most cases, the key areas that dictate how the service charges need to be collected, what expenses the service charges can be used against, etc., is going to be the same. And just having this document that anytime someone wants to check that information, they need to trawl through like a 20, 30 page long legal document is not efficient. So it only needs to be done once, and you will reap the rewards for years to come. So you should be getting on either like a PDF or an Excel or somewhere, writing out the key bullet points with maybe some key screenshots. That's what we even do from the lease, highlighting the areas that are going to define how you are meant to manage that block. Okay, this summary is going to be useful for both your team and the accountant. Again, by providing the summary that you have to the accountant, it's going to result in less questions from the accountants. We experience a lot of back and forth with managing agents where we discover that they have not followed the requirements of the lease. If your accountant is doing, your external accountant, if they're doing the job properly, they should be getting a copy of the lease and ensuring that all the costs have been sort of, incurred and the service charges collected in terms of the requirements of the lease. This is a key requirement. If your accountant should be following Tech 311, and this is like step one of what they should be doing. So if your accountant isn't asking for a copy of the lease, that should ring alarm bells first of all. But when they get a copy of the lease, or we get a copy, I must say, half of the cases when we take on a new client, we discover that there's some element of the lease that's not being followed. Okay, for example, where service charges are being collected monthly when the lease says that they should be being collected quarterly. All these points are essential to get correct to avoid issues if the leaseholder disputes their service charges and takes the matter to the tribunal, because you can you could end up not being able to claim the service charges from that person on a simple technicality that you could have got just by summarizing the lease and making sure you're doing everything in accordance with the lease. So, following on from the previous point, I wanted to specifically bring to your attention, because this is just so common that we see it. It's important to ensure that your service charge year end and so that's your service charge year end, the year end to which you're preparing the service charges, align with your statutory company year end, like your company accounts year end. This isn't always the case. We often see it's not. For example, a right to manage company may be formed and set up in Companies House in the middle of a service charge accounting year. So it'll have like a 30 June year end on Companies House, and the service charge year end is December. Okay. And of course, also checking that you're following the requirements of the lease. It's better to get them both aligned to what the lease requires. This is easily remedied by applying to Companies House to change your accounting year, or by extending or reducing the financial year so that the two dates align. This will then ensure that the same accounting data is used to prepare both sets of accounts, and it's going to save money and time in preparing the service charge accounts because it's all aligned to the same date. The next is to run your resident management company as a dormant entity for Companies House purposes wherever possible. Now, as long as your resident management company doesn't have income, beware of ground rent or interest income. So as long as there's no ground rent or interest income, you can run your resident management company as a dormant company for Companies House purposes, and you don't need to file micro entity accounts. This will save time and money for the leaseholders, right? So the reason we're able to do this is because service charges are classified as monies that are held in trust and not income. So when service charges are paid into the resident management company, it's not income for the company that needs to be reported to Companies House or HMRC. It's just a pooling of funds together of the residents' funds to then pay for obviously the different works that need to be done on the property. You obviously still need to produce service charge accounts, even if you're running the resident management company as a dormant company, but it's going to just be cheaper overall because you're not needing to produce micro entity accounts. Interestingly, we've been recently chatting with one of our clients around why should interest income trigger, if you've been doing dormant accounts, why should interest income that's generated be trigger the need to not do dormant accounts? Ground rent is fine, but why does interest income? Because actually that interest income that's earned belongs to the leaseholders. And that's fine. Yes, it doesn't, because the funds are pooled and that money's held in trust. Any interest income that money generates is not in fact, or doesn't in fact belong to the company. But the problem is that any time in life, as soon as you become an adult, or actually any time, if you earn an income, an interest income, HMRC wants to tax it. So you've pooled people's money together, individual people's money together. And if that money earns interest income, it needs to be taxed by HMRC. So as soon as you have earned interest income, or I mentioned ground rent, you're going to have to file micro entity accounts. And if the interest income is over £100, you're going to have to do a corporation tax return too. Okay. Now, what else did I want to say about that? Yeah, so that's why interest income, why we have concluded, if you read all the best practice and all the guidance around this, interest income can trigger you to not be able to do dormant accounts. But if there's no interest income, no ground rent, you're good to go on the dormant accounts. The next is to aim to complete the bookkeeping and the handover information for your external accountant within 4 weeks of the year end. Why do I recommend this? This is super helpful and of course time saving, because all these tips are about time saving. Because firstly, within 4 weeks of year end, let's run through them. Firstly, fresh in people's minds, top of their inbox. When you ask a supplier for an invoice or a statement, or you're trying to resolve a problem, they're not having to trawl through the lot like 8 months ago. It's there, it's fresh, it's going to be easy for them to find, it's fresh in their mind. They can answer your question. You're going to get your answers a lot quicker. You're going to make it a lot easier for people to find the information they need to find for you. Secondly, it will help massively with budgeting if you do it on a fast turnaround time, because it will help you to check for reasonableness. Yes, you've been doing those checks on your bookkeeping of budget versus actual throughout the year, but as you firm up and raise accruals and make adjustments for year end, you're going to get a true reflection in your service charge accounts of what is being reported against each of those categories. So the sooner you can do that, the sooner you can check whether your budget is reasonable. You can pick up any errors in your budget right at the start of the year, rather than 6 to 8 months down the line when your next financial year end is almost done. Thirdly, it's less stressful. If you just sit around with that information and only 6 or 8 months down the line, you start trying to prepare this information, you're adding unnecessary stress because you have this approaching deadline. And if there's any delays, there's no wiggle room. So it just adds stress to you, which just shouldn't be part of the culture or the environment if you want to be high performing as an estate agency. Okay. Finally, it reduces the number of queries from the leaseholders or the directors of the resident management company, because any queries they have will probably be addressed by the service charge account. So you give them the service charge account and they are able to have any of their concerns probably addressed, or a lot of their concerns, by what is contained within the service charge account. Okay. My next top tip is to ask your clients what they would like to see. Okay, this will not only wow your clients, but it will also save back and forth. Again, it's always about saving the time and the back and forth. When you go ahead and produce a set of accounts for them and then discover that they are really unhappy because the figures have not been presented in a way that's useful to them. Like if they want on the ground maintenance side, if they clearly want the garden maintenance separate from, I don't know, say you've included painting of the outside of the building and they want to see that separately, rather than having to then go back to the accountant to change it and wasting time and money, if you actually ask your clients what's important to them to see, it's going to wow your clients and save time on back and forth. Okay. For example, one that we highly recommend including that as a massive value add for your clients is if you actually include in your service charge accounts a comparison of the budget to actual, not just that goes above and beyond what is recommended for a set of service charge accounts, but we think it adds so much value for them to actually see, right, this is the budget that we provided to you and this is how we've performed, or how we've kind of spent compared to budget. And the final point I want to make is, of course, and obviously I would say this, but not just obviously, it is a genuine point, is to look for an accountant who specializes in service charge accounts. And let me briefly explain why. Most accounting practices are generalists. They cover all areas, trading businesses, non-trading businesses, and across all the industries, which means they know a little bit about a lot of things. A bit like a GP, like a doctor, a GP. This is fine if you're just starting out and you only have a few properties to manage and you have time to spend checking every detail on the service charge accounts and all the little nuances. But when you start to grow, there are matters which would go beyond a generalist accountant. The same way you would go to a specialist doctor when you require heart or brain surgery. When you get to a certain size of property portfolio, you need an accountant who specializes in service charge accounts. Using a specialist means that they know your industry a lot better than generalists. They have other clients like you, which means they are familiar with issues to watch out for, and they are familiar with how to solve your problems that you're likely to have. It means that you can be pre-warned of problems before some of them even happen. And working with a specialist accountant will help you, you to take corrective action before issues even arise. So that is also a big one of our top tips. Okay, so whether it's working with Qube Accountants or finding another specialist in the area, it makes a huge difference to be working with a specialist, even if it is just helping with things like I've done in this webinar to show you how to improve your internal processes, specifically around resident management companies. So that's the end of my presentation. Thank you for your time. I hope you have found that useful. We do have a free guide on our website, which you can either click on, do this link, or go to our website, or you can scan the QR code with your phone now that you can see on the screen. The guide is the 7 mistakes that managing agents make with service charge accounts that you can hopefully avoid. Otherwise, I will also be making sure you get a copy of the checklist that we went through and a copy of the slides. But otherwise, that's the end for now. Vicky, I don't know if you can hear. I can't see any Q&A queries. Does anyone have any questions? Otherwise, we can end off there.
Yeah, there's nothing there at the moment, but we can give it a moment just to see if anyone's got anything that they would like to submit.
Nothing's really coming through. I mean, people can always drop me an email if nothing comes through. And like I said, I'll be getting the checklist and these slides out. Oh, someone has said something. What? So someone has asked, what happens if you continue to file dormant accounts, even if there is interest income? So that's an interesting one. I mean, at the end of the day, what The main issue I see arising if you keep filing dormant accounts when there's interest income is if that interest income is of a significant amount, which we normally say around the £100 mark, and HMRC then says, well, why haven't you been paying corporation tax or reporting this to us? So it's about aligning with HMRC requirements. If we look at Companies House and you go, I can send you a really useful summary around the Companies Act, which dictates how companies are to report information and what kind of requirements need to be met in order for a company to file dormant accounts. That will also highlight to you that, like, in order to meet the criteria of the Companies Act, if you are earning interest income, because that kind of falls outside the scope of what's being held in trust, because it's income that then needs to be reported, then again, you're going against the requirements of what needs to be reported in terms of Companies Act. So how long is a piece of string in terms of will this ever be picked up? You could go years before it gets picked up. But the truth is that, oh, you said trust that a tax will be filed, however. Yes, I mean, the tax is the biggest thing. So it's an interesting comment. It's been a debate that our team's been having recently on this, is like, because there's clear guidance that service charges are held in trust. So it's not actually income that service charges are not income that belong to the company. So if the service charge balance being held in a bank account builds up interest, should that be reported to the resident management company? The norm, the sort of standard practice out there is that yes, and this is assuming, like you say, Anonymous, that you're filing a tax return to report that to HMRC. Do you need to file non-dormant accounts? It's the standard practice is yes, because it's then you're going to use, normally what you do is when you file a tax return, you attach a set of accounts to evidence what you put on that tax return. So it kind of goes hand in hand. You're having to present that information to HMRC anyway. I could see either being argued. So it's really just deciding your stance and then documenting that, so that if it's ever sort of disputed, you have the evidence and the thought process that you've gone through as to why you feel that you should be continuing to file dormant accounts. So hopefully that answers your question. Anything else? I think that's it, Vicky.
I think that's it. Yeah, just someone saying thank you. Other than that, yeah, I think we're good. I think, as I usually say, if you haven't got a lot of questions, then I think you've pretty much answered everything that you could have in the webinar.
Or I've overwhelmed them with too many technical accounting jargons. But yeah, hopefully everyone found this useful, and we'll get the checklist and the slides out to you.
Yes, yeah. I'll be sending out a copy of the recording this afternoon, so I can send a copy of the slides and checklist with that. Otherwise, thank you very much for joining us. Thank you, Ray, for your time today. And yeah, I'll see you all on the next one.
Thanks, everyone.
Have a good day.
Cheers. Bye.
Bye.